Good afternoon, Professor. Thank you for giving us an opportunity to present our research. Today, our team will be presenting the research we did on the financial performance and market analysis of two major Canadian companies, Toronto Dominican Bank and Telus Corporation. Our team consists of 5 members, including me, and I will begin by introducing the companies and providing an overview of the industry context. John will then discuss the bond issuance made by both firms and provide detailed analysis of their significance. Sarah will explore the credit ratings of these issuances and explain how they impact each company's capital structure. Harish will analyze the stock performance of TD Bank, highlighting key price trends and market factors. Finally, Diana will examine Telus stock's price movement and trends influencing its performance in the market. Let me start off by introducing Toronto Dominican Bank, also commonly known as TD Bank. TD Bank is a leading Canadian financial institution formed in 1955 through the merger of two historic banks. With its headquarters in Toronto, TD has grown into one of the top 10 banks in North America. It operates through 4 major business segments: Canadian personal and commercial banking, US retail banking, wealth management and insurance, and wholesale banking. TD offers a full range of services from everyday banking to investment and advisory solutions for individuals, businesses, and institutional clients. The bank is widely recognized for its stable performance, customer-centric approach, and long-term strategy focused on empowering people and communities in a rapidly challenging financial landscape. Telus Corporation, or Telus Corp, is a prominent Canadian telecommunication and technology company with a strong reputation for innovation and social responsibility, generating over 20 billion Canadian dollars in annual revenue. It serves more than 19 million customer connections across mobile, internet, TV, and security services. Operating in 32 countries, Telus has expanded its reach through key divisions like Telus International, Telus Health, and Telus Agriculture. With a market cap of 33.47 billion Canadian dollars and a price to earning ratio of 27.82 as of June 2025. Telus continues to attract long-term investors by blending advanced technology with a clear mission to drive positive and social impact globally.
Today, I'll be discussing the strategic bond issuances by two major Canadian companies, TD Bank and Telus Corporation, and how these moves have impacted their capital structures and financial health. The thesis of this analysis is that these bond issuances are not just about raising capital, but are key indicators of long-term financial planning. This presentation focuses on the bond terms, historical credit ratings, and stock price trends over the last 3 years, all of which will help paint a clear picture of each company's evolving financial position. Starting with TD Bank, we observe 3 distinct issuances over the past few years. The first is a long-term deposit maturing in 2085 with a AA rating from Fitch, showing TD's strength in meeting senior obligations. The next 2 issuances are preferred instruments. The first is a 750 million Canadian dollars of limited resource capital notes Series 5 with a 5.909% coupon maturing in 2085. It carries a BBB positive rating reflecting its subordinated nature and long-term maturity, which compensates investors with a higher rate. The second is a much larger of $1.75 billion issuance of 3.6% preferred stock maturing in 2081. The lower rate compared to the Series 5 note suggests different terms, timing, or market dynamics. These bond choices shows that TD is securing decades-long capital that contributes both to regulatory compliance and long-term growth support. Next, we have Telus Corporation, which entered the hybrid bond market for the first time with junior subordinated notes due 2055. These notes were assigned a BB rating by S&P, lower than Telus's overall credit rating because of their subordinated nature and interest payment deferral features. Telus issued 1.6 billion Canadian dollars split into 2 series. Series CAR with a 6.25% fixed coupon until 2030 and Series CAS with a 6.75% fixed coupon until 2035. After these periods, the coupons were set every 5 years based on the Government of Canada bond rate, with floors of 6.25 and 6.75% respectively. These notes are considered hybrid securities because of their permanence, subordination, and deferrability, giving Telus financially flexibility in times of stress and enhancing their capital base. To conclude, for TD Bank, the mix of senior and preferred instruments reflect a diversified funding strategy that helps meet regulatory requirements while securing long-term capital. For Telus, the move into hybrid bonds was strategic, giving the company more balance sheet flexibility, equity treatment, and a stronger base for managing leverage. These issuances are more than just funding tools. They are carefully designed instruments that signal each company's financial resilience and future direction. Thank you.
Today I'm here to talk about the credit ratings assessment of the Toronto Dominion Bank or the TD Bank. Looking at the Fitch ratings as of 2025, TD Bank holds a long-term IDR of AA, in short term of IDR of F1 plus and a viability rating of AA minus. These are the strong indicators of the bank robust financial stability. What's really key here is the positive outlook of the AA long-term IDR. This positive outlook suggests that there's a real possibility of an upgrade to their ratings, provided by maintaining the current favorable financial performance. So in short, TD is in excellent financial shape, and we could see that their ratings improve even further down the line. Moving on to Telus Corporation, we see a bit of mixed bag here with their credit ratings. S&P recently adjusted their ratings for Telus downwards from BBB plus to BBB minus. This was mainly driven by a higher debt load and their debt to EBITDA, or the earnings before interest, taxes, depreciation, amortization metric crossing a 4.0 threshold. Similarly to DBRS also lowered their assessment to BBB back in 2022. They pointed to increased debt, particularly from significant acquisition and investments in Spectrum. However, it's not all negative. Moody's has maintained a stable Baa2 rating for Telus. This indicates their confidence, suggesting that despite the higher debt levels of some market challenges, they believe that Telus' financial position remains sound. So, with these two agencies have expressed concerns about leverage, Moody's provide a more stable view. Now let's talk about how TD Bank's bond issuance impact its capital structure. TD Bank truly built its foundation on stable funding from highly rated AA senior long-term deposits. This provides incredibly reliable core capital. Critically, they issue exceptionally long-term instruments where talking notes are maturing in 2085 and preferred stock in 2081. So these maturities span over 50 years. The brilliance of this is to directly strengthen their regulatory capital. These instruments enhance their capital base, significantly cut down refinancing risk, and ensure strong compliance with all capital requirements. In essence, TD is strategically securing a rock-solid long-term capital structure. Now look at the implication of bond issuance on Telus Corporation's capital structure. First, their junior subordinated notes are smart. They are hybrid securities that provides 50% equity credit, boosting their perceived equity without diluting shareholders. Second, with the maturities around 30 years. So these notes offer stable long-term funding. So this is perfectly aligns with and support Telus' very capital-intensive telecom infrastructure investments. Essentially, it is a strategic way to strengthen their equity profile and fund their long-term growth. Our comparative insights and strategic recommendations. First, on TD's capital strategy, TD Bank is expertly leveraging its strong credit profile. They are issuing those very long-term, high-quality instruments we discussed, securing stable funding well into the 2080s to support continuous growth. Next, regarding Telus leverage management, Telus is actively addressing their leverage challenges. They are doing this by issuing significant hybrid subordinated notes like the 1.6 billion Canadian dollar issuance with a 30-year maturities. This strategy enhances their capital efficiency and provides crucial financial flexibility. Finally, for our strategic recommendations, TD should absolutely continue to leverage its excellent credit strength for favorable funding opportunities, while for TELUS, the focus needs to remain on strategically utilizing those hybrid instruments and critically on deleveraging further to improve that overall credit profile and enhance their flexibility.
Good afternoon, Professor. I will start my analysis talking about Telus Corp stock price performance between 2022 and 2024 and the key factors that influenced it. In 2022, Telus started at 27.65 Canadian dollars but ended the year at 19.79, a sharp decline of 28.4%. This was mainly due to internal challenges and external market pressures. Moving into 2023, there was a brief recovery to 25.65 Canadian dollars in April, but the stock fell again, closing the year at 22.02, down 11.27%. Finally, in 2024, Telus opened the year at 22.49 Canadian dollars, but by year end, it closed at 19.49 Canadian dollars, marking another decline of 13.34%. Overall, the company saw a total drop of 29.51% over these three years, reflecting a volatile period. So what drove these fluctuations? Let's break it down. The number one was the increased competition. One of the most notable factors was the arrival of Quebecor into the market. After acquiring Freedom Mobile, Quebecor launched aggressive low-rate plans, which significantly pressured Telus' profitability and forced it to adjust its profit margins, putting further strain on its financial performance. The second is debt concerns. Telus also faced significant debt issues with around $20 billion in liabilities in a high dividend payout ratio, using up 90% of its free cash flow. This raised alarm among investors, questioning the company's long-term financial sustainability. The third is the impact of higher interest rates. To combat inflation, the Central Bank of Canada raised interest rates, which negatively affected Telus' ability to manage its debt. This also made other investment options, like fixed income securities, more attractive to investors, further dampening Telus' appeal. The fourth is declining earnings. Telus also undertook significant restructuring efforts, including job cuts and reducing its real estate footprint. These were meant to increase operational efficiency, but they also led to short-term expenses and a drop in earnings. The last key trend is service expansion. Despite these challenges, Telus did make strategic investments like acquiring 5G spectrum and expanding its fiber optic network. While these were very positive long-term investments, they required substantial capital which didn't generate immediate returns, further affecting stock performance.
To conclude, our research provided a comparative financial and market analysis of TD Bank and Telus Corporation. We examined not only their bond issuance activities and credit ratings, but also their stock performance and broader factors influencing investor confidence. Our findings show that both companies play significant roles in Canada's financial and telecommunications sectors with different strategies in capital structure and market behavior. This project has deepened our understanding of financial markets and corporate finance practices. Thank you for your attention, and we welcome any questions or feedback you may have. Thank you.